Good afternoon, everyone. Thank you for joining us live in London and watching online. I'm Paul Rajchgod with Ayre Ventures. I apologize in advance for the state of my voice. I'm getting over a certain illness whose name we don't mention anymore. My wife says my voice makes me sound sexier, but I'm not sure. I'll take her at her word. But we have a very sexy topic and a very sexy panel to talk about blockchain venture capital investing in volatile times. Why don't we introduce ourselves, starting with Dr. Sutter over there.
I'm Patrick Sutter. I'm co-founder and general partner at SNGLR, a Swiss-based venture capital fund, which is actually run out of Guernsey, so quite nearby. I'm originally a trained lawyer, and what we do, I think I will tell you guys later or in the course of this conversation.
Hi there. My name is Resnick. I'm the co-founder and managing partner of Unbounded Capital, and we invest in companies that are leveraging scalable blockchains to solve some of the biggest problems in the world. We're really excited about micropayments today.
Hi everyone, my name is Tiesler. I am the investment manager at a publicly listed venture capital fund in Germany called Tokentis Investments, and I'm very excited to be here.
Thanks, Mona. Hi, everyone. My name is Farid. I'm one of the general partners at Systema Nova. So we're a pre-seed seed fund focused on health, fintech, climate, and also on blockchain, AI, and deep tech. So with that, I'll pass over to you.
Thank you. Hi, my name is Ray.
That's it.
I like that.
Short. I've known him for a while. He's right. That is his name. So let's start off by talking about some of the crazy things that have happened in our industry. And by that I mean, from my point of view, there's two sides to our industry. There's all the crypto noise and nonsense, and where I think all the illegal activity and where the law is coming down on it. That's what's been going on there. Then there's the blockchain side, the actual utility of blockchain. That's why we're here at this conference, and that's what this conference is all about, utilizing blockchain to do things. But all the noise, I believe, has been on the crypto side. And by that I mean, and I don't even like the word crypto, so I'm going to put it in quotes and call it crypto. FTX, Alameda, the SEC, and CFTC clamping down on Binance, and Justin, son of Tron, and Bittrex, and so on. It's very noisy, it's very distracting, there's lawsuits, there's arrests, there's more and more investigations. That can be seen as a big distraction. And the question I put to the group is, and anyone answer, whoever would like to, have you seen that side of things as a distraction for what we do for blockchain venture capital investing? Has it distracted you? Is it an issue for you?
I said in an earlier panel that I think the criminal activity was kind of important to get the industry off the ground, and it's not embarrassing to talk about it. It's that I mentioned porn. I don't want to mention it again, porn and the internet, but another way to look at it is gaming and computing and software systems. Like, it's really pushing the technical envelope and finding the real applications that are useful and then become the basis for more traditional commercial applications. So I see things a little bit differently. I see it as a basis for innovation. Of course, it has a negative context, as does porn. Does it have porn? No, but you know what I mean? Like it has some negative connotations, but it fuels the innovation. So I'm a little bit on a different sort of perspective on it.
To me, I see the biggest negative impact on the investment side of things. So I don't think it's so distracting for entrepreneurs. People that want to build great things are going to build great things, and if they want to build something with big data and they discover that blockchain is a key component to that, some percentage of those people will, discover how to utilize blockchain to do that. Definitely a much smaller percentage have, given the way that crypto and blockchain has played out today. But really, what's sad to me is when I speak with investors, the vast majority of people that are not focused on investing in crypto and blockchain, and even many that are, to them, blockchain and crypto is basically synonymous, and that's the real problem. So to me, that's the distraction, much more on the investment side. But there's a lot of really great entrepreneurs that, regardless of the fact that it's much, much harder to get funded for something using blockchain, doing something real in the world versus a crypto project, are still kind of going that direction. But of course, I think we would see a lot more if there was more funding for those types of companies.
I think it's also affected the macro LP appetite, right, for things, because at the end of the day, if you are a large, let's say, financial services company that wants to be, or an asset manager that wants to be an LP in a fund, perhaps the appetite pre all of this, pre-FTX, pre-Luna, may have been larger in a number of countries as opposed to now. And that is unfortunate, because what that's going to do is, right now there is a lot of dry powder because that's already been raised, but for new managers who are out there raising now and who are actually trying to raise for, let's say, pure play crypto funds only, I would hypothesize that is arguably orders of magnitude harder, because the number of sourcing wells have dried up a little bit.
I see.
And maybe to add, I think in general it's also difficult for our portfolio companies because there are less clients, there's a little bit more fear also from institutions to invest in blockchain or to have budget for maybe being a bit more innovative and thinking outside the box because of fear, because of sentiment, because of not enough education and knowledge out there about the differences between efficiency creating blockchain technology and speculative crypto or negative actors in the space. So that's the con, but I also agree with the pro in the sense that for investors, it's a great time to invest as well because there's a lot of opportunity out there and valuations are more realistic because a lot of that hype is taken out of the market. And also, of course, we have the opportunity to see which companies actually proceed and get through this and don't mismanage funds and really have provided solutions and will provide solutions in the future that are valuable.
I'd actually like to stick with you for a moment, Mona. Can you tell us a bit more about Tokentis' areas of focus and any particular investment that you'd like to highlight that uses blockchain in a unique, innovative way?
Yeah, absolutely. So as mentioned, we're a publicly listed VC out of Germany. We are kind of born, or our network is very much in the German banking and institutional sector. Therefore, we also tend to invest a lot in companies where we have a big value add, where this network provides a really good, almost BD extension arm for our companies. And anybody can buy shares of Tokentus, which also means that we really try to create a lot of symbiosis within our whole stakeholder network, which works really well. It's kind of creating an ecosystem in a Web3 sense almost, with a Web2 angle if you so wish. But therefore, investments we've done which are quite, I would say, typical are, for example, Transact, which is a fiat on and off ramp that essentially works or utilizes with over 160 cryptocurrencies and works with 75 plus blockchains, helps onboarding of customers from Web 2 into Web 3, let's say, in over 150 countries. So it really provides this, like, maybe what they want to do, an end-to-end solution for onboarding of users from Web 2 into Web 3, been around since 2019. It was a Series A investment. So I think that's a pretty good example to showcase a little bit what we look at, right? It's a real world use case that's really helping onboarding people into the space and then helping this industry to grow. And I think that's very, very valuable.
That's great, thank you. Farid, can you tell us more about what areas you focus on, what you guys do, and any particular investment you want to call attention to?
Yeah, no, thank you so much. First of all, thanks for having me here. Systema Nova, primarily, as I was mentioning, invests in a couple different vertical areas. We're not a generalist fund, so we don't invest in absolutely everything, but we do focus on B2B applications. We're largely excited by anything that can make businesses more efficient, that can help them be quicker, faster, better, cheaper. So with that in mind, I would say that blockchain, of course, is the perfect partner, right, for all of that stuff. So whether you're looking at, in the fintech space, for example, any sort of settlement activity that can be orders of magnitude faster. So whenever we see a pitch, and this is, I guess, a shout out to entrepreneurs here in the audience who are building such things, if a VC looks at your pitch deck and sees that this is 10x cheaper, 20x faster, that's a great call to action, right? For them saying, okay, if that is the case relative to the rest of the market, then that's a slam dunk for me. So typically, I think we do, however, take a markets first approach, which really means, I don't know if any of you know who Don Valentine is, but he was an absolute legend in venture capital. And he used to say that I don't just invest in great founders, I invest firstly in very large markets. So I very much come from that school of thought where if you look look at a large market, and if it's large enough, and I mean by large enough, I mean trillion-dollar markets, not billion-dollar markets. So you can already see now that you have publicly traded companies like Microsoft, like Apple, like a few others that are now trillion-dollar market caps. So that is what you hopefully want to own if at the end of the journey, if you're investing in some of these companies. Will a lot of your companies become trillion-dollar companies? Absolutely not. Would you want them to? Of course. So market size, I think, is a huge determinant for us, first and foremost, and then of course the quality of the entrepreneur. But whether it's healthcare, or it's financial services, or in fact climate, and I'm really excited about climate. You said, I think you were interested today in, was it microcredit?
Yeah, the ability to do payments or move data for extremely low dollar amounts and extrememely low energy amounts.
That is so exciting, right? Yeah. Like, I mean, just the moment you hear that, especially when you take a step outside of Europe, take a step outside of the US and go to the emerging markets or frontier markets, and you walk around in interior India, let's say, for instance, right? And you see what's happening there with the help of mobile telephony, and you see how many people have these little machines in their hand, right? And what they could do with payments and micropayments. But even in the West, if you're talking about giving a smaller tip on something, it's just too expensive, right? And that's what I think was the promise of blockchain. Mm-hmm. So we stay focused on cases like that, and we're excited on full stack finance firms. Curate, our investment with Google Ventures was announced yesterday, so really excited about that deal. And they're full stack finance business for carbon removals. And in this day and age, I mean, that's just so exciting to see climate and finance come together. And I would argue again that in the future, a lot of the rails for that stuff have to be blockchain enabled.
Mr. Sharma, I'm going to put you on the spot here. Tell us a little bit more than your name is Ray. So in particular, you're the founder and CEO of Extreme Ventures, which I know is one of the leading, if not the leading, seed stage VC in Canada. But you've also got some activities in Africa that I think we'd like to hear more about, Pacer Ventures, Pacer Labs. But in particular, or rather generally, can you tell us what you do with those groups and where blockchain comes into play, if at all, with all those various groups?
Okay, thanks, Paul. There is a few government, hugely, massively scalable applications that they're ports, they're customs, land registries that we're seeing deployed throughout the continent. Our primary focus is in Lagos and in Nigeria, at least for now. It will expand to several other countries on the continent, in particular Kenya, South Africa, and Egypt. Those 4 countries are kind of head and shoulders above the rest of the continent when it comes to venture and M&A activity. The vast majority of the startup activity is fintech related, about 80%. The vast majority of the unicorns and the exits have also been along these lines. So the continent, especially Western Africa, is developing a significant reputation of being innovators. It's sort of similar but different to, remember back in the day when China started doing all these things in their messaging applications comparable to what we had here, and they were just basically emulating WhatsApp and other existing systems. And then before you knew it, China was starting to integrate gaming and payments and all these innovative things that we started copying them on. I have a similar thesis when it comes to what's happening down in the continent. 50% of all mobile transactions on the planet are happening on the continent. Now back to blockchain. Now the truth is the blockchain is just one of a checklist of items that is a technical check mark. It's like, if you were to put yourself on the procurement side, you're going to be interested in having certain minimum specifications of which blockchain meets. But it would be just like blockchain, web-enabled, this-enabled, that-enabled. It would be maybe one of 10. So I don't want to overemphasize. It's not the point of the solution. Like people, especially the procurement side, especially building a new solution, they want to have it as part of it. It's like a technical feature, like having security, but I wouldn't oversell it.
Yep, I agree with that. Patrick, Singular is the newest kid on the block. Can you tell us why that's the case? Tell us more about Singular's area of focus and what you do.
Well, thank you. So what we decided in 2019 is to go hunt for the most interesting, exponentially growing topics which are in the business right now. Or in the future, of course. And we decided that this should be longevity on the one hand and smart mobility and smart cities on the other hand. And then we went to check for the technologies where we, again, expect the most growth or assistance in the growth of these sectors. And we decided that this is going to be AI in the blockchain. And so what we call the hashtag now on horizontal and verticals. And for us, let's say the almost just as important question is the one, what can we bring to the targets that we're planning to invest in? And so we have a very strong team which is in the field of venture building. So we believe in that we can actually improve the targets that we are looking at. So to just give you two examples, one is a company which we think is going to be the leading drone infrastructure provider. And surprisingly to us, they were like really great at what they did and were also kind of acclaimed by the drone producers, let's say. But they didn't have a micropayment solution for the landings, and they wanted to be paid by landing, per landing. And so we can actually provide the assistance to them, and that made them choose us as the VC whom they would pick, because we were just the ones who could give them best expertise among those whom they met. And then another example is an IoT platform, which we, in partnership with Ayre Ventures and the Block Dojo, tried to convince that they should actually move the whole platform to the blockchain, because they were actually very capable of that, but for some reason they decided it's too much. They don't need that. They only need 80%. They always said they don't need the full 100 for what they do, because it's an IoT platform for smart cities. And so at the end of the day, we just decided not to do the investment, because we said, okay, if you're not going to the blockchain, on the blockchain, we're probably not the right fit for you. So they refused the advice. So maybe as a counter example. And so our goal is now to finish or to get to the first closing this summer. So which we're just about to do. And so we're based from Switzerland, as I mentioned. The team is, although we're a first-time fund, is very senior, not to say old. And because we believe in that experience which our targets need to actually get to that next level which we want them to grow.
Any interesting investors at the table you'd like to reveal?
Yes. So we have this partnership with Ayre Ventures, who is one of our anchor investors, but just as much as the money of the LP, we really appreciate the fact that we can work with you on your technology, let's say, on your BSV, as well as we can have our targets be part of the Block Dojo. So this is a full specter partnership, which is hopefully going to pay out great for everyone.
Absolutely.
So you like him better than us, is what you're saying?
Today, yeah.
Okay.
Yeah. Zach, those of us who have been following BSV blockchain space for a while are likely familiar with Unbounded Capital and your focus on scalable blockchains. But is there anything new you want to reveal to the audience here and online about what Unbounded Capital is up to?
Yeah. I know we have some supporters in the room that I've had the pleasure of seeing earlier today, but to just share like a little bit more about the types of companies that we're really excited about and kind of the intersection of what I think a great venture capital investment is with some of the future technology that will be adopted at scale. So Ray mentions he's investing primarily in some of these really fast-growing African countries where there's a lot of fintech activity. That's an area we've looked at extensively and made a couple investments ourselves. We have an early investment from our first fund that's been our highest performing thing to date, but the one I want to talk about now is a company called DXS. So DXS isn't just checking the box in terms of using blockchain. DXS is leveraging Bitcoin SV, which today is the most scalable blockchain, to be able to allow people to invest or trade into US equities, US equity derivatives, currencies, in increments as low as 1 cent. So the types of companies we really like are the ones where blockchain isn't kind of a check mark, but these are technical founders that are leveraging blockchain to do something that was never possible before without blockchain, or able to do something that we know is an established market today, but do it at least 10x faster or cheaper as a result of using blockchain. So in terms of kind of what's new, since I last spoke at a conference like this, we're actively looking at more companies that are not using blockchain today, but we think are extremely likely to use it in the future. So for example, we've invested in a company called RF Labs, which is, today their main product is actually like a poker table software and RFID cards. This incredible 19-year-old out of Atlanta, Georgia, figured out how to get RFID cards to be manufactured about 8x cheaper than anyone else in the world ever had before, because he needed to make those economics work for his business. And poker is kind of his first thing that he's going after, but he eventually wants to transform the way that games like chess and poker and other things are played with one another, where every move is kind of tracked. There's AI that is assisting your ability to improve as a gamer for whatever game that you're playing. You're able to see your friend's scores. And we really love his vision. And he's not using blockchain at all today, but because of his hardware and software suite and how, especially for some of his customers that are like card houses, eventually casinos, security is extremely important. And we're very confident that he'll end up needing to use blockchain as he scales and grows his business. And because while we love those companies like DXS, where it's technical founders that are leveraging blockchain as really an infrastructure play to allow other people to unlock this incredible technology, the reality is that there's not that many examples of people doing that today, at least from our perspective. So looking at some incredible founders that hit the traditional boxes of what makes a good venture investment, but that are much more likely than others to use blockchain soon, is something that we're starting to look at as well. So we've just made one investment in our newest fund that fits that criteria, but that is probably taking us maybe about 50% of our diligence time looking at companies like that. Of course, our kind of noise ratio is a lot higher after leaving the scalable blockchain world that we just know so well, and seeing kind of future scalable blockchain companies. I know Ayre Ventures has also kind of taken that approach a little bit more over the last few years, but that's kind of the only material change. Besides that, our focus, research and writing, is still understanding, will Bitcoin SV continue to stay on top of scalable blockchains? What are some new potential participants in the market? Yeah.
Awesome. So back to our topic about investing in volatile times. We didn't talk too much about the economy and where that comes into play. We did talk about some of the effects we're seeing on investing. But so obviously the blockchain world, and in particular investing with blockchain VC, is not immune from the effects of high inflation, possibly recessionary environments, et cetera. Are you folks seeing any impacts on your investments, your potential investments, trends in valuations or deal structures you want to speak of that you think are happening as a result of, these economic times? Whomever wants to tackle the topic first.
Well, I guess the topic is down rounds, right?
Yeah.
I think it's the overall topic, and I think if you're mostly doing the you're kind of trying to make ends, or to make the target and the investor meet in some way, so that you can convince your investor that he should now invest despite these times. And so, of course, the argument which you bring then for that towards your LP is the fact that there is down rounds in that sense available to actually great companies, so that you can, the opposite side of the middle of what we just discussed, you can actually try to convince them with that part of state of things.
Yeah, valuations are down. There's always an inverse relationship between how people are excited about an industry and how profitable it is to invest in those industries. If you look at venture capital funds from 2010, by and large, they radically outperformed those from 2007, 2006, 2014. And I think the vintages of VC funds, like some of us have here today, from this year will likely really outperform. And what I'm personally seeing is we're, like a lot of VCs, concentrating our investment approach, so investing in fewer companies but taking much larger percentage ownership, because there's a lot of our highest conviction investments that have, from our perspective, we would maybe say the intrinsic value has gone up 2, 3, 4x over the last 1 or 2 years, and we're now able to invest at lower valuations than we did a year or two ago. So that's what we've largely deployed capital over the last 6 months into things like that. And no one has ever really consistently predicted macro over a large sample size, so I don't think any of us here or any of us really anywhere could do that. But as long as this is the case, I think it's the best investment environment I've seen since starting Unbounded Capital.
I mean, I would agree with that, and maybe just on a different note, because I think we all agree that it's a good time to invest because valuations are lower. I always say it's a little bit like discount shopping. But on the other hand, what we're also seeing in terms of more structural changes, which I think is quite prominent, is that when there was a bull market, there was a lot of token rounds. So companies raising purely on tokens. now the dominant structure that we see is a safe or an equity investment with a token warrant for future tokens that are potentially launched or not. And I think that is a very clear outcome of a little bit of fear and not knowing exactly how things are going to go. So people go back to what they know, which is equity. And I think that's been pretty obvious to me in terms of how everyone was raising on token and now no one's raising on token, which is something that I think is very clearly well, it came out of the bear market that's been going on for a while, and about fear and a little bit of not being educated enough to understand maybe some of the tokenomics and the value add of token investments as well as equity.
Anyone else? Go ahead.
Yeah, I mean, mine's going to be a very quick one, and it's primarily around the slowing pace of deployment, right? So I think that most VCs will now take a strategy, ourselves included, take your sweet time. If there's no, there's really no light under my ass to basically do more than one deal a month, to be perfectly honest. And I'm going to use that time to actually do a better job with DD, build better conviction in the companies that I'm going to hopefully invest in, get to know the founders better. So actually I look at the plus and the boon is that it's less transactional. It's much more about building relationships, hopefully getting back to basics, the way venture capital was. And I'm quite enjoying it, I'll be very honest. I think it's a good time to invest, and it's a better way to invest than before.
I know we're running short on time, so I'll just quickly say from the audience's perspective, you don't necessarily want to maximize valuation from your investors. I know it sounds counterintuitive, because with great valuation comes great expectations, and therefore great responsibilities. It's a truth. And so there's that Silicon Valley episode, if you ever watched it, where the entrepreneur was at the bar, he got pushed out as the founder, and he's like, you mean I could have raised at a lower valuation? That's actually possible? And he ran out of the bar type of thing. That's the only comment I'll make.
Yeah. I'll just add that we've got some investments that are with executive teams that have been there and done that before, built companies, sold them, had good experiences, had less than good experiences, but nonetheless they're experienced in raising capital in good times and bad. We've also got investments with more junior executives. This is their first time around, even though we may have invested in them years ago. This is their first experience with this kind of market. And let's say they're trying to raise capital again, and they say to us, well, why are you saying there's more risk? You guys are VCs, you're supposed to take risk. And I try to explain, yes, we take risk, but we also try to de-risk and mitigate risks. And we've got investment committees to answer to. And when markets change and dynamics change and all those things change, the investment view and our view of risk has changed. And so it's just interesting to sort of have to explain that to some folks who are new to it. Speaking of new, maybe you guys have heard of a topic called artificial intelligence. Have you heard about it? Raise your hand if you've heard of this topic, AI. Anyone? Have you heard of it? It's a thing. It's becoming big. Some of you have experience investing in AI, have experience with AI. Why don't we tackle that topic real quickly? What is your view on where AI sort of crosses with blockchain in particular, if we can talk about that? Anyone who wants to handle this?
So I think micropayments are going to be the core of what the future of AI looks like. So right now it's relatively trivial to create, images of kind of anyone in this room if you just got a photo or a few photos of them and feed them into Midjourney or something. So how will we know which photos are actually real and what's authentic? By having
everyone has less fingers apparently. I don't know why AI has a problem with fingers.
Sometimes it's more fingers.
Too many fingers?
Yeah, often more than
too many
less. Yeah.
Don't mind the teeth.
I think the biggest impact that you can't oversell the profound impact of AI. If you look at the thought leaders like Bill Gates and stuff and what they've said, they're saying it's a bigger innovation to humanity than the internet itself, which is when was the last time you heard that one, right? So for me, the biggest impact, especially for the folks in this room, is the cost to develop product. So it is unbelievable. Codex and GitHub. What you're hearing with ChatGPT is only one of about a dozen different models that you can employ to do amazing prototyping, amazing, initial development. So at the seed and pre-seed level, companies that would raise, say, on average $500,000, prototypically they would put $300,000 into software development. So now that $300,000 is dropping down to $30,000, and now you're able to either take that 270 and focus on sales, or 270 or raise less money. I think there's going to be a massive shift in focus from product development to sales. That's my 2 cents.
But if I may add, oh, sorry. Yeah, so if I may add, I think that the real benefit which the blockchain will have for AI is probably that because I mean it is very efficient, of course, and the productivity gains from AI are immense, but the degrees which is kind of missing in that so far is trust, right? And the blockchain, so everything which is data driven can actually profit from the trust layer which the blockchain can provide. And so I think that's where the productivity and the efficiency will still increase. So we can even say that the AI needs the blockchain to really gain that trust level.
Understood.
I think a lot of people are focused on the software layer. I think there's a lot that needs to be done on the hardware layer. So if you think about chips, the chips that were there yesterday are not fit for purpose today. So a lot of people are investing in things that are, let's say, for example, blockchain silicon, right? Specialized chips that'll be able to handle processing for AI. Very different. You'll see a lot of some phenomenal new designs coming to market in the chip space, which again is all about efficiency, cost of compute, like storage, all of those things are going to change, and I think for the better. So there was one company that had mentioned specifically, it came out from Israel and did a great round last year called Chain Reaction. Have a look at those guys. Not one of our portfolio companies, may I add, but fantastic innovation going on in the hardware space as well.
Great.
And maybe just to go back just on the software and the trust aspect that we've mentioned, there's a company called Jiritsu Networks, and they essentially came up with a novel mechanism called zero knowledge consensus. And what they're able to do is verify workflows, which also means they can attest where the data sources are coming from and how this data is used to come up with an AI answer, right? So essentially any enterprise that might need to verify to the regulator, to the users, what data has been fed into the algorithm that is now providing a service, they can verify that, and they use core blockchain technology aspects in order to be able to do that. And I think that's a really nice, very technical, but very interesting intersection, how these two technologies can dance with each other in order to actually make mass adoption more available to a lot of people.
So interoperability becomes the big topic, right, between the technologies.
Very interesting. Any other topics anyone wants to raise? We're over time, but maybe we can quickly raise any other questions anyone has, comments?
Yeah, I just think, focusing on a lot of companies in the BSV space for a number of years now, there's often an elephant in the room of okay, if empirically this blockchain is the only one that's gotten faster and cheaper over time, literally the only one, why does it have such a poor reputation, and why aren't people investing in it? And I think the one thing that we've had the most success with in terms of connecting with our investors, connecting with entrepreneurs that kind of wrote us, whether hey, you're investing in this space, we really like this technology, but all the crypto blockchain VCs I know say that if you build on this, we wouldn't be able to get investment. It's actually kind of different than what you're saying, Farid. If some investors like us see, oh wow, you're using a scalable blockchain, great, that's a plus. Most today, that's still a negative, not due to the technology, but due to just kind of the reputation of the BSV ecosystem. So what I tell people is just don't worry about explaining the technology. Don't focus on how great it is. I think it's really great. Me and my team have written a book about how great it is, but we try to talk about that as little as possible with investors and with folks, and just do as much showing versus kind of telling. And this is a conference about scalable blockchain, so of course there's going to be kind of a lot of telling and theory and stuff, but I think just really focusing more for the entrepreneurs in this room on showing what blockchains can enable, while abstracting as much of that away as possible. So maybe it comes up in DD, but it's not kind of a core part of the pitch. I think that would kind of serve folks well, but there's very much that elephant exists. It's maybe a smaller elephant now than it was a few years ago, and we think eventually it's going to, of course, be, to most people, look as a huge plus by using a scalable blockchain, but unfortunately today that's still a reality, and if you're building on the BSV blockchain today, there are those kind of negative ramifications you have to keep into account. Of course, I think that the positives long-term outweigh it, but it's just something to acknowledge and to navigate, whether you're investing in companies directly like us, or you're approaching investing in funds to have more diversified exposure to these companies.
Very good. That is all the time we have for today. Thank you very much for joining us.